Inflation is still hot and prices are still raging. So what does Powell want to do? Make your credit card bill go higher and lay off millions of Americans. Do you need to lose your job for inflation to go down? Jerome Powell seems to think so. Now, do you all think that that's fair? Let me know based on your thoughts in the comments down below. Because where I'm standing, regular everyday Americans are struggling with inflation. Corporations are not. Do you guys agree? I mean, a big part of this really is that corporations like Walmart and Kroger, they keep food expensive because, well, they can. The European Central Bank is looking out for price gouging, as they're calling this a matter of greedflation. Well, there's definitely something wrong here. I think you guys feel it too. If you're new to the channel and you're interested in your daily dose of the truth when it comes to the US economy, the stock market, the housing market, global conflicts, and more, be sure to hit the subscribe button now and make sure your notification bell is turned on. And if you own a home, make sure your home is protected. Get your free home warranty quote. There's a link in the description down below of this video. Now, to make matters worse, Jerome Powell is saying that the worst is yet to come. That's what he told lawmakers in their recent hearing about this. Now, after the reversal that we saw in inflation last month, the Fed is now saying they've got to make monetary policy tighter to slow a growing economy. Translation, more pain for the average American. Now, as Jerome Powell put it, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of data were to indicate that faster tightening was warranted, we would be prepared to increase the pace of rate hikes, end quote. Those remarks carry two very important implications. Now, one, that the peak or the terminal level of the federal funds rate is likely to be higher than what the Fed officials were predicting before. And two, that the switch last month to a smaller quarter percentage point increase could be very short-lived if inflation does continue to come in and run hot. So just imagine you're facing red hot inflation on one side and skyrocketing credit card bills and mortgage dues on the other. Now, in their last estimate, the Fed officials pegged the terminal rate at 5.1%. But now market investors and economists are following Jerome Powell's remarks and seeing in a final interest rate range of 5.5 to 5.75%. Huge difference. So does this mean that you need to lose your job for inflation to go down? Well, Jerome Powell seems to think so. When the Fed raises interest rates, it makes it more expensive for people and for businesses to borrow money, which can definitely slow down economic growth. This is their goal. And this can lead to companies cutting back on spending, such as hiring new employees or expanding their businesses, or heck, even keeping the employees that they have, because it becomes more expensive to borrow money to pay for these activities. So in turn, this can result in layoffs or job losses for companies who are looking to cut costs or to maintain profitability. Additionally, higher interest rates can lead to a decrease in consumer spending, as a lot of people, may have to spend more on debt payments, leaving less money for other expenses. So this can ultimately result in reduced demand for goods and for services, which can ultimately lead to job losses. Overall, when the Fed raises interest rates, it can have a huge ripple effect throughout the economy, making it even more difficult for companies to grow and for Americans to find and keep jobs. Lawmakers asked Jerome Powell about this. In particular, Senator Elizabeth Warren didn't let Powell go without him fully taking responsibility for the millions of jobs being lost. She talked about unemployment, and the Fed projected a 4.6% unemployment rate by the end of the year. Now, as Elizabeth Warren pointed out, quote, that's a full point higher than it is today, and it would result in 2 million people losing their jobs. Now, while Jerome Powell said that this is not an intended consequence, he also did not deny Warren's statement. Warren also asked the chair how he would explain to the American people that they need to lose their jobs to help inflation come down. Warren suggested that these rate hikes hadn't yet tipped the economy into a full-blown recession, but haven't controlled inflation either. She argued there are other things at play that the country should target, such as price gouging and ongoing supply issues. We'll get onto that later in this video, but I gotta agree with Warren on this one. There are other issues affecting inflation, and in my opinion, price gouging is definitely one of them. Now, Elizabeth Warren ended her questioning of Jerome Powell with a pretty strong case. She noted that since World War II, there's been 12 times that the unemployment rate increased by a single percentage point in 1 year. She then asked Powell to answer a question. How many of those times did the United States economy avoid falling into a recession? Any guesses, guys? Jerome Powell said, quote, not as black and white as that scenario, but Warren point blank said, quote, the number is 0, end quote. Recession. Add that to the list of things that'll make it harder for the average American. Now, the question is, what about price gouging? Why aren't Powell and President Biden going after this? Here, check this out.
At the grocery store, shoppers are looking for relief.
I used to spend like $40 a week, and then it ended up becoming like $70 a week. Frankly speaking, it jeopardizes our monthly budget.
Having a hard time living and keeping up with inflation.
Food prices go up, no-name prices won't. Guaranteed.
Now Loblaw says it's freezing prices for its no-name food products until the end of January, though they could still go on sale. Food bills are up almost 11% in a year, and with major grocery chains seeing profits increase, they've become a target for consumer frustration.
Rising profits is not a contributor to inflation.
This economist took a look at the numbers and says there's no evidence of price gouging.
The price increases that we see at the grocery store are reflecting higher costs of producing those goods and services.
But other experts say looking at the core operations of the grocery business, companies are still coming out on top.
Margins are actually pretty high, and the return on equity of companies like Loblaws has been very, very strong.
That video is from Canada, but the same thing is definitely going on right here in the good old capitalistic US of A. It's just that we can never trust mainstream media to report what's really important in our economy. Warren makes a very solid point about this. She said, quote, "Let's remember the Federal Reserve has what's called a dual mandate, 2 jobs. One is to deal with inflation and the other is employment. And the idea that you just throw workers under the bus in order to try to bring down inflation, that's not what the law says. And it's a very worrisome approach for the chair of the Federal Reserve," end quote. Then she explained that there are many factors contributing to high prices. We know, for example, that price gouging is part of it. We know that the war in Ukraine, we know that supply chain kinks, they've all contributed to high prices. None of those are going to be solved by raising interest rates, end quote. I don't know, I gotta actually agree with Elizabeth Warren on this one. So what could be alternatives to raising interest rates? Warren says, quote, "I go much more aggressively after the price gouging. So for example, we already know that in the industries where there's the most concentration, that is where there's not much competition, these prices have gone up the fastest and the profit margins have increased the most. That means there is a place for our federal government to bear down on those industries and make clear that price gouging is not something that we're going to put up with," end quote. Could it be possible inflation is not as attached to the interest rates or employment numbers? Now, my take is that these prices will never go down. Only the rate of change with the inflation might go down. Follow the money for the past 3 years. And if you do that, it just kind of comes down to the top earners getting richer and greedier. They're simply just using all of this as a mask while taking in record profits. They're able to charge crazy prices since we all pretty much write it off as the norm, blame it on inflation, while caring even less about their own employees. Corporations are keeping food expensive because, well, they can. And in the 3 years since the pandemic took hold of the United States, the economy has whipsawed ways that even top academics are still trying to understand at this point. But grocery prices have been on a relentless hike and probably more aggressive than any other segment of the market. And the peak may still be miles away. So here's the deal. Even though ingredients have gotten cheaper over the past year, food producers are not budging. The reason? Why would they? But to be sure, food manufacturers, they have to factor in the cost of labor and transportation, which remains pretty high compared with previous years. But at the end of the day, they're not lowering the prices because they don't need to. Because, surprise, they make more money that way. When inflation soars the way it has since 2021, it's not unusual for big corporations of all stripes to use the moment to raise prices. It's an opportunity for them. In fact, quote, "Companies view these as occasional opportunities and they don't want to miss out," end quote. Between 2022 and 2023, groceries got 11.3% more expensive for a variety of reasons. Take eggs, for instance, right? So the price we pay at the store for eggs went up nearly 140% between 2021 and 2022, then another 70% last year, thanks to a devastating avian flu, higher feed and transportation costs, and not least, producers jacking up prices to lock in profits. Foul play, you might say. Yeah, that was my attempt at being funny. I probably failed at that. But anyway, it isn't just food companies taking advantage of the inflationary moment, but food is where most Americans are feeling the pain. Because while you might forego a new couch or a new car or dishwasher, everybody's got to eat. Many food companies are forecasting that they might slow down or pause price increases, but not lower them. That's because pricing is sticky. We get used to paying more, and over time, we hardly even notice it. Sure, there have been supply chain pressures and there have been commodity cost increases. I get it. But companies have taken price increases that exceed that. They are absolutely profit taking. They even brag about it to shareholders on those investor calls. I mean, just look at the numbers. Elementary and secondary schools food up 301%, utility gas services up 26%, electricity up 11.9%, flour up 20.4%, breads up 14.9%, baby food and formula up 10%, airline fares up 25.6%. Now, like I said, guys, the math is not mathing here. This is practically daylight robbery that we're seeing right in front of us. Now, if you zoom in, only a few of the many goods listed in the CPI have really seen sharp increases over the past year. Yet, without exception, the largest firms responsible for manufacturing and supplying them have seen massive, sometimes record financial windfalls over the same period, with the companies themselves at times just outright admitting that they've raised prices higher than they need to. But do they talk about this in mainstream media? No, of course not. What they talk about is wage growth and the jobs report. They let the Fed go on and on about this plan to tackle inflation by killing jobs to the point of potentially engineering a recession. This is a wealth transfer, folks. Many factors contribute to inflation. Before we start throwing people out of work, why not first focus on those who really do the most harm, like corporate greedflation? I mean, Europe's already doing it. The European Central Bank said it was paying just as close attention to trends in profits as they are to wages. Minutes of their last meeting said, quote, "Profit growth remained very strong," which suggested that the pass-through of higher costs to higher selling prices remained robust. It was therefore widely stressed that developments in profits and markup warranted constant monitoring and further analysis on an equal footing with developments in wages, end quote. So yeah, monitoring and even regulating corporations' profit growth is certainly something that our government should be taking a look into. I mean, am I right, guys? Let me know if you want to talk more about corporate greedflation and how it affects you and your cash flow. We can even talk about some side hustle and investments opportunities in all of this. Also, for the very best way to invest in gold, hit the link in the description down below of this video. And also feel free to drop any kind of comments or requests that you guys have for me. But thanks so much for tuning in for today's economic update and daily news report. The Fed throwing the average American person under the bus. 2 million people losing their jobs because of interest rate hikes, and how corporate greedflation is the real culprit here. Definitely another major news drop happening very, very soon, guys. Make sure you keep watching. I appreciate you guys always dropping a like on the videos. I totally appreciate the support. Certainly helps keep the YouTube lights on, if you know what I mean. And have you subscribed to the channel? If you haven't, what are you waiting for? Anyway, appreciate you guys watching. Please be kind to one another, and I'll see you on the next one.